Today is Tuesday, April 2nd, and this is another update on my progress beating the S&P 500 along with the Ark Innovation ETF. I do make these videos every Tuesday and Sunday, so if you want to follow along, hit that subscribe button, and let's get into it. On Monday, April 1st, I decided to switch out of having an all-cash portfolio. I decided on taking 26% of my entire portfolio and spreading it across 13 different positions. So I ended up putting 2% into each of them, and some of them I have held previously, and a couple of them are new ones. Originally, I had about 16 or 17 positions that I was going to enter into, but I ultimately decided 13 was best. And then this morning, once the market opened lower, I decided to put 25% of what I already held into each of them. So essentially raising it from the initial 2% to now having 2.5% into each of these positions, which brought me from 26% invested to 32.5% invested. Still definitely not very large positions, but that's kind of the way I want it right now. I want to be invested just enough so if the market does go up, I'll see some of the benefits, but if it goes down, I'll still have enough cash on hand to kind of capitalize on that. These are all my current positions. Right now, Spotify is my best one with a 2.42% gain. Other than Yum Brands and Disney, everything's pretty much in the red. Right now, Square, Darlings, Capital One, and PayPal are definitely all my biggest losers. I definitely feel pretty good though because I'm only 32.17% invested, which means I almost have 68% sitting in cash. Right now, I'm not going to be too quick to kind of add to these positions besides what I already did this morning. If there's some sort of dramatic pullback, I'll consider it. But if they just go down another percentage point or two over the next couple days, I think I'm just going to hold off. This is what the VIX chart is currently looking like. You can see that it crossed above the 15-day and the 5-day moving average over the last couple days, and it's right currently at this trend line, which would explain why stocks have been going down over the last couple of days. Whenever it hits this trend line, it seems that if it goes just above it, if it does at all, it always comes right back down to here, this other trend line. The thing that's kind of concerning me is that this trend line is pointing upwards, which means that if it does continue to bounce down, it's just going to make higher lows, which isn't necessarily good for stocks to go up, because generally when the VIX is down, that's when stocks do the best. So it's definitely going to be something to keep an eye on over the next couple of days. So here's the SPY chart, which tracks the S&P 500. This blue arrow, 4-1, is where I decided to switch out from an all-cash portfolio. I figured there was a good chance that it could bounce off the 5-day moving average and go up a little bit, and it actually did the opposite, and it went all the way down to the 15-day moving average. Which if we look, the last time that it did that on March 15th, it eventually climbed all the way back up to this trend line. I'm not necessarily expecting that here, but it definitely is a possibility. But this is the reason I'm only 32% invested, because I definitely don't want to be like 85% invested and then have it come all the way down here to this trend line. Again, the main reason for that is just because my portfolio has done so well to start off the year. It's the same strategy I used last year and it worked pretty well. Since last Wednesday, my portfolio went down 0.34%, the S&P 500 rose 0.03%, and the Ark Innovation ETF dropped 4.5%, which brings us year to date, my portfolio has a 16.5% gain, the S&P 500 has a 9.76% gain, and the Ark Innovation ETF on the year has a loss of 5.39%. That's all I got for today. I do make these videos every Tuesday and Sunday, so if you want to follow along, hit that subscribe button, and I'll catch you on Sunday.